Hi guys, I hope you all are doing great, and today I'm here to help you with the MCQs provided by your institute for your paper number 2. Okay, so let's quickly take a look on all the MCQs very fast, and this will help you to prepare before your examination. You can watch this lecture before you go for your examination. Okay, let's start. The revenue and expenses of a company are displayed in which balance sheet, cash flow statement, income statement, or periodicity statement? Yes, your answer is correct. Income statement. The main purpose of financial accounting is to provide financial information to shareholders, to maintain balance sheet, to minimize taxes, to keep a track on liabilities. Yes, to provide financial information to shareholders. Accounting provides information on cost and income for managers, companies' tax liability for particular year, financial conditions of an institution, and all of the above. I think all of the above is the correct answer over here. Yeah. The determination of expenses for an accounting period is based on the concept of objectivity, materiality, matching, or periodicity. So you guessed it right, it is matching. For a particular year, you have to match the expenses. Accounting does not record non-financial transactions because of equity concept, accrual concept, cost concept, or money measurement concept. Yes, the correct option is money measurement concept. Provision for bad debt is made as per the entity concept, conservatism convention, cost concept, or going concern concept. Yes, that is correct. Conservatism convention. Then, fixed assets and current assets are categorized as per the concept of which? Separate entity, going concern, consistency, or time period. Yes, your answer is correct. Going concern. Now, the next that we have is okay, money measurement, conservation. Yeah, correct. So, omission of paise and showing the round figures in financial statements is based on which concept? Conservatism, consistency concept, materiality concept, or realization concept? Yes, tell me. Materiality concept, because paisa is not that relevant as per the situation right now rather than rupees. So that's why we round it off. P&L account is prepared for a period of 1 year by following consistency concept, conservatism, accounting period concept, or cost concept. Yes, 1 year, that is your accounting period concept. An expenditure is capital in nature when the receiver of the amount is going to treat it. It increases the quantity of fixed assets for the purchase of fixed asset. It is paid as interest on loans for the business, or it maintains a fixed asset. So the answer is option number 2, which is it increases the quantity of fixed assets for the purchase of fixed assets. Okay, that is why an expenditure is capital in nature when increases the quantity of fixed assets. Okay. Now, capital expenditure are recorded in balance sheet, profit and loss account, trading account, or manufacturing account. Yes, very good. That is balance sheet. Which of the following transaction is of capital nature? Purchase of truck, replacement of old trucks, cost of repairing, or all of the above? Tell me. Purchase of a truck. You're purchasing a new thing. That is your purchase. Like that is your capital expenditure. 5,000 incurred for upgradation of computer by installation of 128 MB RAM is. Now you tell me what type of expenditure it is. Upgrading the computer. So now your computer is going to add some more value life. So that is your capital expenditure. Entrance fees of 20,000 received by a club is. Tell me what kind of fees they have received, entrance fees. So that is your capital receipts. Okay. Then life membership fees received by a club is revenue expenditure, capital expenditure, or is an example. Sorry. Okay, 1 second. I might have missed something. Yeah, correct. So life membership fees received, life membership, this is one-time fees that they are giving. So it is your capital receipt. Okay, because again it is not going to be received not every year. So that's why not revenue, it is capital receipt. And revenue receipt is not given as an example also. Cost of goods purchased for resale. Now you are going to resale. So that is your revenue expenditure, because now this is going to give you revenue in future. It is going to revenue receipts is being gonna be incurred out of it. Import duty of raw material purchase. Again, it is a revenue expenditure because you are going to sell that product and get the money. Okay. Now, Received from Solomon and Company an invoice for 1500 for repairs to factory walls. Now repairs is done. They have not mentioned it is upgrading, so we will consider this as revenue expenditure. Compensation received from government for compulsory acquisition of land. If you have received compulsory acquisition of land, it is not expenditure, that's a receipt. So here there is no receipt, none of these. All revenue receipts and expenditures are shown in which? So you know it very well. Revenue is shown in trading and profit and loss account. A bad debt recovered during the year will be, it will be a capital expenditure, revenue expenditure, capital receipt or revenue receipt. Tell me what it should be. So bad debts received is your revenue receipt because we have already debited that to your P&L account. Okay. Insurance claim received on account of machinery damaged completely by fire. So it is damaged by fire. Tell me what it should be. Yes, that's correct. Capital receipt. Because this is one time thing you're getting. Machinery is damaged. Amount of 5,000 spent as lawyer's fees to defend a suit claiming that the firm factory site belonged to plaintiff's land. Now, we have paid lawyer's fees. So what type of expenditure this will be? Yes, you are correct. This one is a capital expenditure. Okay. Money spent 10,000 as traveling for, because this is a suit for claiming firm's factory site. Now this is going to give you advantage in a longer run. That's why capital expenditure. Money spent 10,000 as traveling expenses of the directors on trips abroad for purchase of capital asset. Now, will this impact anything? Yeah, you tell me what it should be. It is 100% going to be capital expenditure because we are doing it for acquiring that particular capital asset. Nominal account represents profit and gain, loss, expenses, none or both A and B. So you have learned this rule in your 11th and 12th also. So it's both A and B. SBI account is a nominal account, artificial personal account, representative personal or none. So if you are given personal, it will be artificial personal. Okay. Process of recording business transactions in a book of original entry is known as what? Yes, very good. Basic of our 11th, journalizing. Prepaid rent is nominal account, representative personal or tangible asset. Representative personal because you have been given like a specific name for it. In an account, if debit is greater than credit side, the balance is known as debit is more than credit. So it is going to be debit balance. Okay. Now let's go ahead. A sale of goods to Ram for cash should be debited to Ram, cash, sales or capital account. Sale of goods for cash. Tell me what it should be. Yes, that should be debited to cash because we have received cash. Withdrawal of cash from business by the proprietor should be credited to. We are withdrawing the cash. Tell me what it should be. Yes, again, cash account. It should be credited because my cash is going from the business. So cash account will be credited. Rent account is personal, real, nominal or none. Tell me. Yes, that's correct. Nominal account. It's an expense. Or it can be income also if you are receiving the rent. Ledger contains various dash in it. What ledger contains various? Ledger, postings, oh sorry, transactions, entries, accounts. Tell me. Ledger contains various accounts in it. Okay. The process of transfer of entries from day book to ledgers is called as ledger posting. Day book to ledger if you are doing, that is called as we are posting in the respective ledger. Rent paid to landlord is credited to, you're paying the rent. So rent account will be debited to credit which account? Cash you're paying. So it will be cash account. Okay. I hope till question number 35 we are very clear. Okay, let's go ahead. Which financial statement represents the accounting equation asset equals liability plus owner's equity? Asset is equals to liability plus owner's equity. Where do we see this owner's equity then liabilities? That is your balance sheet. Okay, in balance sheet it is represented in that way. One side all the assets, other side owner's equity like equity shares, debentures, etc. Equity shares, preference shares, everything. Your capital reserves, general reserves, and then you have your liabilities, debentures, sundry creditors, every liability, outside liabilities, etc. Okay. Now, the debts written off as bad if recovered subsequently. We have again, like we have already seen this, but here specific account is given, credited to bad debts recovered. A trial balance will not balance if Correct entry is posted twice. If it is posted twice, it is always going to balance. Purchase of a credit on a credit basis is debited to purchase and credited to cash. That is also going to balance. 500 cash payment to creditors is debited to creditors for rupees 50 and credited to cash 500. Amount difference happened, account difference happened. So this one is not going to balance. Trial balance shows what? Honesty of accountants, accuracy of accountants, only arithmetical accuracy of accounts. Yes, only arithmetical accuracy of accounts. Process of recording business transactions in a book of original entry. Again, they have asked you the same question. It is journal. So this MCQs you have to see before an examination because this is going to help you. And I'm keeping it very short. In an hour, we are just covering all this. Okay. In an account, if debit is greater than credit side, then the balance is, again, they have asked you the same question, repetition of question. This can be asked in your exam because I think they are repeating it because students might be getting confused about it. So you have to be very prompt. Debit greater than credit, so it is going to be more of balance, debit balance. Ledger contains various dash in it. Again, they have repeated this question. Yes, tell me. Accounts, very good. The process of transferring entries from daybook to ledgers is called as ledger posting. We have already seen. Ledger is also called book of final entry because if you have posted in the ledger, now this can't be changed. Okay. Whenever errors are noticed in the accounting records, they should be rectified at the time of preparation of trial balance without waiting for accounting year to be end, to come an end, and after preparation of final or in the next. So if you are aware about it, without waiting for accounting year to be end, you just have to correct it whenever you notice an error. Trial balance will not tally if correct journal entry is passed twice, it is going to tally. Then credit purchase debited to purchases and credited to cash, so this is also going to match because the accounts have been changed. 5,000 cash paid to creditors is debited. Now you have paid to creditors, you have not received, so that is where you are going to go wrong. Okay, this one is your option. None of the above. To creditors for 500 and credited. I guess this option is somewhere wrong. So you should have to go with third option. Sale of sham of rupees 500 not recorded in the books will affect. So sale to sham, it should not be of sham, sale to sham not recorded in the books. So what is it going to impact? Sale account and sham's account. Okay. That's option 3. Then what we have next, let me scroll a little. Yeah. Errors of carry forward from one year to another affects which type of account? Tell me. Personal account and real account, both it affects. So it is going to be both A and B. Goods worth rupees 272 returned by Lala passed through the books as rupees 722. Rectification entry. Now you have to find out the difference. So there is a difference of 450. Now Lala will be debited by 450. Now what had happened? Goods returned. So what will be your entry? We have received the goods and we are going to do it to the sales return. Right. So it is going to be to Lala and buy like sales to Lala. Right, we were supposed to pass goods worth 272 return. This was going to be passed, but what we did it wrong. Right, we did it 720. Right, now 722 more has been credited to Lala, like the difference of it, that is 450 more has been credited. To balance it, I will do Lala to sales and that is going to be 450. Okay. So Lala will be debited by 450. They have not asked about sales, so I am just taking this. If a receipt of 200 from Rajesh, debtor, has not been recorded in the books, the profit would show. Now, say receipt from debtor is there. Now it has not been recorded. Now tell me how it is going to affect profit. Receipt is there. It is going to affect the cash account and your debtors account. In P&L, that is not going to impact neither an increase nor a decrease. Okay, I hope we are clear till 50. We have covered 50 questions. Around if 10 also they ask you from here, you are very good to go. A credit purchase of 950 from Sudhir was recorded in purchase book as 590. Now, see, credit purchase is there from Sudhir. Purchase account to Sudhir account. It should have been of 950, right? 950, but what we did is actually 590 and 590. Now, what we have a difference of 360 rupees, right? Now, from Sudhir was recorded in the books, recorded in purchase book as 950. So we have recorded more. right? Credit purchase of 950 was recorded in purchase books at 590. Okay, I'm so sorry. They have recorded at 590, but this should not be done. This should have been done as 950. So 360 more will have to record. Purchase account will be debited by rupees 360. This is the correct entry and this is wrong entry. Okay. Which type of these errors affect only one account? We have to tell me which type of errors affect only one account. Error of casting, error of carry forward, error of posting. All this is going to affect only one of the account. Okay. Now, which of these is our recurring indirect expenses, which is going to happen again and again? So, right, go down, rent and insurance is going to happen again. On receipt of goods, the consignee debits which of these accounts? When we have received the goods, will we be debiting purchase account? No. Will we be debiting goods account? No. Consignor's account? No. It has been on receipt of goods, the consignee debits which account? He is going to debit a different account than these options. So this is none of these. Okay. X sends out goods to Y costing 1,50,000. Goods to be sold at cost plus 33 1/3%. Consignor asked consignee to pay an advance for an amount equivalent to 60% of sale value. First of all, you have to calculate 1,50,000 plus your 33.133%. And then out of this, consignor has asked to pay 60% of sale value. Now, I'll give you 1 minute. Calculate what is 1,50,000 plus 33 1/3%. Okay, do it fast. Yes, so 1,50,000 plus 33.133, that comes out to be around 2 lakh rupees, right? Rounded off, it becomes 2 lakh rupees. Now 60% of this is 1,20,000, option number 1. Okay. Goods of the invoice value of 2,40,000 sent out to consignee at 20% profit on cost. Now this is the value, right? This is a profit on cost of the loading amount. Now tell me what should be your goods like of the invoice value. Now 2,40,000 is including 20% profit, right? So it is going to be 2 lakh and 2 lakhs 20% on profit cost is 4 lakh. Okay, because see what we are going to do, 2,40,000 is your into 100 divided by 120. This gets cancelled. This is going to be 1 and this is going to be 2. 1 2 3 4. Okay, so that comes around to be 2 lakh and 2 lakhs 20% is 40,000, because this 2,40,000 is 120%, already including that percentage of profit. Goods sent on consignment account is of the nature of, tell me what is the nature of it? Consignment account, that is a real account. Goods went out and whatever comes in, that is your credit. Out of the given option, which cannot be treated as part of cost of purchase for valuing stock on hand? When you're valuing stock in hand, what things you are not going to include? Packaging will include, octroi we can include, delivery charges we can't include, freight also we will include. Okay. X sent out 100 bags to Y costing rupees 1,000. 60 bags were sold at 10% over cost. Now, 1,000 plus 10%, that is 1,100. Sale value will be, tell me what should be the sale value. So 60 bags into 1,100 is your 66,000. Very simple numericals they're asking you. This is going to be an advantage for you in the exam. Okay. Consignment accounting is made of the following accrual basis, made on the following basis: accrual basis, realization basis, cash basis, or all of the above. So you always have to remember consignment accounting is done on accrual basis. Which of the following term is true about consignment? Sale of goods, hypothecation, shipment, or mortgage. So if we are putting things on consignment, it is shipment of goods. Okay, great. 60 questions, 61 questions we have covered so far. Okay, let's go ahead and see what are the next ones. Yeah. Which of the following term is true about, oh sorry, we have done that. 62. Which of these accounts are not opened in the book of consignor? Consignor will not open this. So it is going to be commission account. Okay. Consignment account will open, goods sent on consignment account will be opened, and consignee's personal account will be open. But this one, commission account, will not. For closing stock held by consignee, which account must be debited? Closing stock held by consignee, which account you will be debiting? You will be debiting the consignment stock account. Okay. X of Kanpur sends 1,000 boxes to Y of Delhi costing 200 each at an invoice price of 220. So 10% margin is there, 10% profit. Each good sent out consignment to be credited in general trading will be, now if you're crediting to general trading, you will be recording on cost 200 into 1000 boxes, that is your 2000, 2 lakh rupees. A proforma invoice is sent by, who is going to send a proforma invoice? Consignor to consignee. Okay, option number. Then what is said next over here? Commission will be shared by consignor and consignee, only consignor or third party, only consignee. No other person can share this. Okay. X of Mumbai sends out certain goods at cost plus 25%. Invoice value is 2 lakh. Now this one includes your 100 divided by 125. Yeah. So calculate this and tell me what it should be. I'll do it for you somewhere. So if we do it with suppose 25, so that's going to be 4 and 5, and this one is 1 and this one is 40, so it goes around 1,60,000 is the cost. Now 4/5 of the goods were sold by consignee at 1,76,000. So out of this 4/5 has been sold. Okay, nearly around 1,20,000 might be sold if I'm not wrong. Commission 2% up to invoice value and 10% on any surplus above invoice. Now let's just calculate 4/5 first. On invoice value, they have said, okay, on 2 lakh rupees. So first we'll have to calculate this basic value. Okay, that is going to be 5 into 1, and that's going to be 3. And 1 over here, 32,000 into 4, that's 1,28,000, right? Now 1,28,000 we have calculated. Now the amount of commission, what they have said about commission up to 2%, commission 2% up to invoice value. Okay, now 1,28,000 invoice value, what is this going to be? Calculate on a calculator. 1,28,000 plus 25%. Now tell me, that is 1,28,000 plus 32,000, it goes around 1,60,000. Okay, now this is the invoice value. Clear? Right. Now 1,60,000 with sold on 1,76,000. So commission up to 2% up to invoice value and 10% on any surplus. So if you calculate 2% on this, that is going to be around 3,200, and 16,000 more because 1,76,000 is there. 1,76,000 minus your 1,60,000, that is your invoice value. So you'll get 16,000 into 10%. That is going to be 1,600 more. That is your total commission, 4,800. Option number 1. I hope this is clear. I didn't have much space and I want to keep only one screen in front of you. That's why I'm not shifting anywhere. But I hope you'll calculate this on your own again. Okay, do it once on your own. Let's go ahead. Joint venture of a capital joint venture account is nature of personal, nominal, real, or suspense. Tell me what type of account it is. Yes, that's a nominal account. A and B purchased a piece of land for 40,000 and sold it for 60,000 in 2021. Originally, A had contributed 24,000 and B had contributed 16,000. What will be the profit on venture? Now, what they have got the profit 20,000, and this 20,000 you have to divide in the ratio of 24:16. So if we talk about 24:16, that is 3:2 if we divide it by 8 stable. Now 20,000 divided by 3:2. If you do it divided by 5, that's going to be 4,000, that is 12,000, and your around 8,000. So this is the share of 24,000 was contributed by A and B. What we are asked in the question, what will be the profit on venture? So 20,000 is your total profit on the venture. Okay, I didn't read it correctly. It's entirely 20,000. A for joint venture with B purchased goods costing 2 lakh rupees. B sold 80% of goods for 2,50,000. So 80% you will get the cost as 1,60,000. Right, 1,60,000 goods value cost 1,60,000 goods are sold for 2,50,000, 90,000 above. Balance goods were taken over by B at cost less 25%. Find out profit of venture. Now tell me, then 40,000 goods are remaining. 40,000 less 25%. If you do it, you'll get around 30,000. Now for 30,000 he has taken the goods. We have earned 90,000 profit. Now tell me what it is. Has taken over the goods. Okay, sorry. From 2 lakh 80% has been sold. Yeah, 1,60,000. 40,000 less your 25%. 10,000 rupees. So you were here, you had earned about 90,000 less your 10,000 loss, right? So it is 80,000 rupees. If unsold goods costing 20,000 is taken over by venture at 15,000, the joint venture account will be credited by. Now 20,000 unsold goods were there costing 20,000 is taken over by venture at 15,000. Joint venture account will be credited with how much amount? Yes, that's correct, 15,000 amount. Now, next, memorandum joint venture account is again your nominal account. Okay. Now, A purchased goods costing 42,500. B sold goods of 40,000 at 50,000 rupees. So he earned a profit. Balance goods were taken over by A at same gross profit percentage as in case of C. Now here 40,000 rupees goods were sold at 50,000. Now tell me how much is the profit? 10,000 is the profit. That means 25% on cost. Now 2,500 goods sold at a profit of 2,500 like at 25% again. So what you are going to do? 2,500 plus 25%, that will give you 3,125. Okay. What is the nature of joint venture with co-venture accounts? With co-ventures, it is going to be personal account. Okay. M and N entered into joint venture where M supplies goods worth rupees 6,000 and spends 100 on various expenses. N sells the entire lot for 7,50,000. Meeting selling expenses amounted to 200. Profit sharing ratio will be equal. N remits the amount due. Amount of remittance will be. Now here he supplies goods of 6,000 and spends 100 on various expenses. So 6,100 is what he has done. This one spends around 7,500 plus 200 is the expenses. Like sells the entire lot for 7,500 and 200 is your expenses. Now how much is going to be the remittance? Right. So it is going to be 6,700. Correct. Yes. Now A and B purchased a piece of land for 20,000 and sold it for 60,000 in 2021. For 60,000 in 2021. So 40,000 is your original profit. Originally A had contributed 12,000 and B had contributed 8,000. We are asked profit on venture. Simple question, 40,000. A and B enter into a joint venture sharing profit and loss in the ratio of 1:1. A purchased goods costing 20,000. B sold the goods for 25,000. So he has earned 5,000 profit. So if we calculate, they have earned 25% profit on it. A is entitled to get 1% commission on purchase and B is entitled to get 5% commission on sales profit will be. Okay, so now what they've asked to get 5% on sales, the profit will be. Now 5,000 is your profit. Out of this commission and all, everything is going out. After that, we are only left with 3,550 because he is going to get commission here only, getting entitled to 1% commission on purchase. So that is going to be 200 rupees. Okay, and this will get 5%. So 25,000 into 5%. So that is going to be 1,250 again. So if we combine this, it is going to be 1,450 deducting from your 5,000. That's why we get 3,550. Okay. Here 200 again we'll add over here the purchase commission, that is 1,450. 5,000 minus 1,450 is going to give you 3,550. Okay. Goods costing 10,000 destroyed by accident. Insurance claim nil. Now, if we have not got any insurance claim, then no entry will be recorded in the books of joint venture. Okay. I hope we are clear till here. So we have covered 78 questions. Few more and we'll be done with this. Which of the following statement is true? There is no difference between joint venture and partners. Consignment and joint venture is same. There is no separate account for joint venture. The separate act for joint venture. And in case of joint venture, the number of third party is none only. No, here we have this one as true. There is no separate act for joint venture. Okay. Which of the following accounts are maintained in the joint venture when separate set of books are account? When separate set of books are account, you'll have joint bank account, joint venture and co-venture, all of these accounts. If A co-venturer takes away goods under memorandum joint venture method, then he will debit these goods in his books to which type of account? He will be debiting it into purchase account. We will show that he has purchased those goods. Okay, I'll scroll a little. Yes. Now, okay, for opening joint bank account, in case of separate books of account, joint bank account is debited and ventures capital account is credited. Okay. The person other than the original creditor to whom the amount in the bill is made payable is known as dash of the bill. Tell me, they are not paying. He is payee to whom the amount is going to be paid. Payment of bill of exchange is received by drawer, by holder in due course, by endorsee, or by bank. Tell me, by holder in due course. Whosoever will be having the bill, they can take it. Necessary, it is not necessary, drawer will only have it. Retirement of bill means making the payment before the due date. Very good. At the time of retirement of a bill, acceptor debits what? Bills receivable, bills payable, discount, or none of the above. They are going to debit the bills payable account because it is getting clear. Party who is ordered to pay the amount is known as payee, drawer, drawee, endorsee. So drawee is the person who pays the amount. In which of these ways a bill of exchange cannot be disposed of? Discounting with bank, retained till maturity, endorsement to creditors, or destroyed. You can do first three options, but destroying the bill will not give you disposal. Okay. Bill receivable book is a part of ledger, balance sheet, journal, or profit and loss account. So bills receivable book, if you are maintaining, that is also a part of journal. X sold goods to Y for 30 lakhs. I'm not sure they've written 30 lakhs. It's somewhere around 3 lakhs. Half of the amount will be received in cash and the balance through bills receivable. For what amount X should draw a bill? So you tell me, half is received in bill, half is received in cash, 1,50,000. A person who endorsed a bill is called as drawer, drawee, bank, or endorser. So you know it very well. It is endorser. In the question only they are giving you answer. Read the question very carefully in the exam. At the time of dishonor of an endorsed bill, which one of these accounts would be credited by the drawee? Drawee will be crediting the drawer account. Date on which the payment of bill is made. Public holiday, date of grace, due date, or date of bill plus 3 days. Tell me which date? Due date. Correct. Now, Kunal draws a bill on Sham. Kunal has drawn a bill on Sham for 3,000 rupees. Kunal endorsed it to Ram. Ram endorsed it to Rahim. Now, pay of the bill will be. Who is going to pay this bill? Now, Rahim will pay this bill. Okay. Payee is the person who is going to receive the money. Okay. Few more questions and we'll be done. If the due date, okay, if the due date is a public holiday, that will then what will be the due date of the bill? Preceding day. We have read about this. On 1/8/23, X draws a bill on Y for 30 days after sight. Date of acceptance is 8th of August 2023. Due date will be now 8th of August. So from 8th of August, 8th of September, then you'll be giving 9 and 10. So that is 10th of September 2023. Okay, 8, 9, 10. If bill drawn on 3rd July for 40 days, payment must be made on 3rd July 23. 3rd July 23 to you will be taking 40 days, that is 12th of July 23, and then you'll be providing them 3 grace days, 13, 14, 15. But 15th August is a holiday, so we will be doing it on 14th August. Okay. Now, if the manager is entitled to a commission of 5% on profits before deduction, before deduction of this commission, he will get a commission of dash on the profit of 8,400. Now, manager is entitled to commission of 5% on profit before deducting this commission. Now, you tell me what it should be. Calculate it. 8,400 into 5%, that is your 420. Balance of petty cash is expense, income, asset, or liability. Tell me what it is. It is an asset. 100 questions we have done very nicely. Okay, few more and we will be done through this. Fixed assets are kept in the business for use over a long time for earning, meant for resale, meant for conversion into cash as quickly as possible, all of the above. So these two don't fit in, first one fits in. Manufacturing account is prepared to ascertain the profit or loss on the goods produced, to ascertain the cost of manufactured goods, to show the sale proceeds from the goods produced during the year, or both B and C. Tell me what it should be. Manufacturing account is prepared to ascertain profit or loss from the goods produced. A company wishes to earn a 20% profit margin on selling price. Uh, which of the following is the profit markup on cost which will achieve the required profit margin? So 20% on selling price. So that is your 1/5, right, on selling price. Now, when we are talking about markup on this, that is 1/4 of cost and 1/5 of selling price. This is how it works. So if it is 1/5 of selling price, that means you have to come back. If 1/4 of cost was given, you'll go ahead for selling price. So 1/4 means your 25%. Option number 2. Then a company, at the time of preparation of financial accounts, bad debts recovered account will be transferred to debtors account, profit and loss account, P&L adjustment, P&L appropriation, undoubtedly P&L account. Depreciation appearing in trial balance will be debited to your P&L account. Gross profit is equal to sales minus cost of goods sold, sales minus closing stock plus purchase, say opening stock plus purchase minus closing stock, or none of the above. Sales minus cost of goods sold. Profit and loss account shows financial results of the concern of a property, financial position of concern, or financial results of concern on a particular date, or cost of goods sold. So it is for a period. So it is option number 1. Don't be confused in option number 1 and 3. On a particular date is your balance sheet, but this is your for a period. Which of the following is not part of financial statements? P&L, balance sheet, cash flow, trial balance. So trial balance is not part of your financial statements. Based on which of the following concepts is share capital account shown on the liability side of a balance sheet? On the basis of business entity concept. Okay, that's why we use it as like we keep it on the liability side, because that is also our liability. Closing stock appearing in trial balance is shown in trading account and balance sheet, profit and loss account, balance sheet, or trading account only. Tell me where it should be. Closing stock appearing in the trial balance. So that is going to be there in balance sheet only. Okay. Now let's go ahead. Consider the following data and identify the amount which will be debited from sundry debtors in balance sheet, which will be deducted from sundry debtors. Bad debts 1600, provision for bad and doubtful debts 2000, and current year's provision, new provision, is 800. Tell me. Yes, you are correct. That is going to be that is going to be 800, which is going to be deducted. That is for your particular year. Okay, 1 second. The pointer went off. Yeah, so that is option number 2, 800. Inventory is included in the category of fixed asset and investment, part of current assets, or intangible fixed asset. Tell me. It is part of current assets. Endowment fund receipt is treated as capital receipt, revenue receipt, loss, or expense. So receipt is there. We are going to treat it as capital receipt. Which one of the following is not prepared by a non-profit organization? They're not going to make the profit and loss account, and they'll make income, revenue, receipts, payment. Legacy are generally capitalized, treated loss, revenue expense, or deferred revenue expense. So it is always capitalized. Any donation received for a specific purpose is asset, revenue receipt, capital receipts, or none of these. So you know it very well, that is capital receipts. Receipts and payment account of a NPO is a real account. Debit what comes in, credit what goes out. Now, if 1500 was outstanding at the beginning of the year towards subscription of 10 subscription, and 10,000 is received during the year, with rupees 2500 still outstanding at the end of year, amount to be taken in receipts and payments. 1500 was outstanding at the beginning towards subscription, 10,000 received during the year, with 2500 still outstanding. What are you going to take in receipts and payment account? Yes, you are correct. You are going to take 11,000. 10,000 this and 1500 and 2500's difference, you are going to add it. Okay. Any revenue expense for which a separate fund is available will be It is going to be debited to that separate fund. Separate fund is there, put it over there. Sale of old material must be shown on the credit side of cash book, income, expenditure, balance sheet, or none of these. Tell me what it should be. Yes, that is correct. Income and expenditure account. The information for the preparation of receipts and payment account is taken from where? It is going to be undoubtedly taken from cash book. That is where receipts and payments are recorded. Any donation received for a specific purpose, again they are repeating this question, that will be your liability. Okay, for a specific purpose. And here they had asked about endowment fund. Okay, that's a capital receipt, but specific purpose, that is your liability. You have to do it for that particular purpose only. I'll scroll it a little. Yeah. Receipts and payment account shows the following: subscription arrear 500, current 10,500, advance 800. There are 1,200 members, each paying annual subscription of 10. So how much you have to recover? 12,000. Amount to be credited to income and expenditure account. Now, arrears were 500. Now they might have been recovered. Current we have 10,500. Okay. So advance we have received 800. And we should be receiving 12,000 rupees. So the amount to be credited in income and expenditure account will be 12,000 rupees. Okay. Any income, because we do it on accrual basis, any income arising from special fund will be credited to which account? Tell me, special fund. So special fund in the balance sheet. I told you special is given, do it in special. Income and expenditure account shows subscription at 10,000. Subscriptions occurred in the beginning of the year and end of the year were 1,000 and 1,500 respectively. The figures of subscription received appearing in receipt and payment account will be. Tell me what it should be. Current year 10,000. Difference of these two, you have to less deduct it 9,500. Okay. 10,000 was expected of this year. 1,000 was like opening subscription, and 1,500 we don't have it right now. Okay. Which of the following items are shown in income expenditure? Only items of capital nature we don't show it only. And then only items of revenue nature, it is asked in income expenditure. So capital and this both will come. So capital and revenue, both these things. Total cost incurred in the operation of a business undertaking other than cost of manufacturing and production is known as, which cost it is? That is your commercial cost. Very good. Which of the following is not a relevant? Replacement, sunk cost, marginal cost. Sunk means already went into water. No need, not relevant. Process cost is very much applicable in which type of industry? Tell me. Process is your pharmaceutical industry. Main purpose of cost accounting. Why are we doing cost accounting? Because it provides us information for management, to management for decision making. Opportunity cost is the best example of. Okay, I'll scroll a little. 1 second. Yeah. So we were opportunity cost is the best example of what? Sunk cost, standard cost, relevant cost, or irrelevant cost. Tell me which one it is. It is relevant cost. Option number 3. Costs are classified into fixed cost, variable cost, and semi-variable cost. It is known as what? Which we are doing it. That is your behavioral classification. Okay. Which method of costing is used for determination of cost for printing industry? So it is based on job, how much you give the prints, that is a job costing. Over which of the following cost management is likely to have least control, where the management will not be having more control? That is your advertisement cost. Okay. Compared to others, you can control. You can fire the people, machinery breakdown is there, you can get it repaired and everything. But building insurance, that is in your hand, how nicely you keep it. But advertisement cost, you can't keep in control. Variable costs are fixed for a period per unit, depends on the entity. Now you know it very well, that is per unit. Variable cost as per the units it changes. Okay, 136 question we have done. Seems very good, right? For our one day before examination. In behavioral analysis, costs are divided into production and non-production, controllable and non-controllable, direct and indirect, fixed and variable. Tell me which one it is? Fixed and variable. Okay. Prime cost plus factory overheads is known as, yes, that's correct, factory cost. Which of the following items is excluded from cost accounts? We are not including in cost accounts. Income tax, you won't include, interest on debentures and cash discounts. So all of these. The following is included in financial accounts but not in cost accounts. Financial accounts you do it but not in cost accounts. Do you include dividend paid? Yes, correct. You don't include dividend paid over here. Okay. Yes, let's go ahead. Few of them are remaining. Advertisement are treated as direct expense, cost of production, selling overheads, or distribution expense. Tell me what it should be. It is your selling overheads. Which cost system description applies to manufacture of 20 engraved doors for the new clubhouse of a golf course? Now they have given you specific thing. So if it is specific in a batch, you are doing 20. So that is your batch costing. Prime cost may be correctly termed as sum of direct material and labor cost with all relevant other cost excluded. So do you think this one is right? Let's see the next. Total of all cost which can be directly charged to production unit. So this seems right. Okay. Total cost incurred in producing a finished unit. No, you can't include your administrative overheads and etc. The sum of large cost, there is a product cost. I don't think so. This option is even valid. So this is option number 2. Okay, this one you might get a little confused. I'll just mark it properly. This one is batch costing. Okay. Now, prime cost may be correctly termed as sum of direct material and labor cost with all other cost excluded. Okay, this we have done. So option number 2. The guidance and regulation by executive action of the cost of operating an undertaking is said to be budgetary cost, cost analysis, cost control, none. So it is cost control, guidance and regulation on executive action of cost of operating. Okay. Direct expenses, direct expenses are also known as overhead expense, process expense, chargeable expense. Tell me what are these? These are chargeable because we can directly charge it on that product. Indirect material cost is a part of prime cost, factory overheads, or chargeable expense, or none of the above. Tell me. Yes, that is your factory overheads. Which of the following is a part of both prime cost and conversion cost? Direct material, indirect labor, indirect material, direct labor. Direct labor is your conversion cost also. Okay. Statement showing breakup of cost is known as cost sheet, statement of profit, production account, or tender. Very good. Cost sheet. You might have read about this, and this is something important they can ask you. We get confused over here. Work cost plus administration cost. Work cost plus your administration cost is your cost of production. Okay, because we are keeping an eye also. Then director's remuneration and expenses form a part of. Will it be production overhead? No. Administrative overhead? Yes. Okay. Cost reduction is long-term phenomena. It challenges the standards. It is carried out without compromising the quality. All of the above. Cost reduction includes all of these. Interest on own capital is cash cost, notional cost, sunk cost, or part of prime cost. So it is interest on own capital is notional cost. We are not actually calculating it. Okay, that is just a notional cost. So I hope this 152 MCQs you have revised very nicely, and this is going to help you for the examination. Do watch it before you go for the examination. Okay. All the very best for your exam. Perform very nicely in all the paper, in both both the days of your all 4 subjects. Okay, all the best.